Hello guys, I'm good on my side. Thank you so much for joining. We're going to do a question of which I think this should be the last question. We're doing balance sheets and income statement. I think now we need to move on and start the cash flow statement, of which on Wednesday I think we're going to start doing the income statement starting from Wednesday. So for today, we have this one last question. I want us to do the notes for retained income. I want us to do the notes for ordinary share capital. I think after that, for me, I'll be happy with the work that we've done so far. Obviously, we'll still come back closer to the exam date just for revision and just remind ourselves of everything that we've done so far. But now we need to go and look at the cash flow statement, fixed assets, analysis and interpretation of financial statements, financial indicators, and then we look at some concepts regarding the audit. I think those are the things that we're going to focus on going forward. More specifically, we're going to look at the statement of cash flow, and then we deal with the principle regarding that statement. Other than that, I think I'm happy with the progress so far. The videos that we're doing, guys, the classes that we're having, I'm recording them. I'll be posting them on YouTube. Please go there to remind yourself of everything that we've done. I think there's already 2 videos that are sitting on YouTube. When you get time, you must go back whenever you feel that there's a need for you to go back. You'll find those videos. You must search PBK tutoring there, and you will be able to, I guess you'll be able to see those videos. I'm not sure if I can show you where to go. Let me see if I can show you where to go. Just go to YouTube, and then after that you will be able to see those videos when you search PBK tutoring there. Just go and search PBK tutoring on YouTube, and you will see there is a channel there. You click on the channel, and then you obviously going to subscribe there on the channel, and then after that you can see there is accounting grade 12 statement of financial position class 1. I can see someone viewed it. I don't know. Yes, there's another one also, but these are the old classes that we had. I'm still going to load more, and then don't worry about the other videos. Those are the ones that we're doing at the university. I'm going to hide these ones so that you guys don't focus on them. But more specifically, these are the 2 that you're going to see for now. I'll be adding more, those that we're currently doing, and then you'll find them on YouTube. Okay. You're just going to search PBK tutoring, and then you'll find the channel, and then you subscribe to it, and then so that you will be able to see all the videos that I'm loading. Okay, we are here today's financial statements, balance sheet, and notes and audit. I'm not interested in the audit part for now. I just want us to do the balance sheet and the notes. This is 75 marks, 45 minutes. This is a March question paper. March question paper also, which means it's something that we can expect when we're doing our March examinations. So let's be careful, guys. Okay, 3.1, choose a description from column B that matches the term or concept in column A. Write only the letter A to E next to the question number 3.1.1 to 3.1.5 in the answer box. That's what us to do. And then we have column A here, and then we have column B. This is just a matching column A and column B. There's nothing much here. So let's go through it, guys, quickly and see what which are a description. So under column A, we have companies and intellectual property commission. This is CIPC. And then we have a director, we have IFRAS, we have limited liability, we have independent auditor. Okay, so I'll be going through A, B, C, D, and then you tell me which one it matches with. Okay, so here when they say guidelines for the preparation of financial statements to ensure consistency, this is for you, Smanga. Which one are we going to choose this side? Which one are we going to choose this side? Guidelines. I'm looking at number A. I want you to tell me which one it matches with on column A, right? So they're saying here, guidelines for the preparation of financial statements to ensure consistency. Which one is the guidelines this side for the preparation of financial statements to ensure consistency?
Number 3.1.3.
3.1.3. Okay, so this is going to be IFRAS. Yes, IFRAS will match with number A. So I'm going to say 3.1.1 and then I'll say this is A, this side. Okay, so which means now we are sorted with this one. Okay, let's give this one to Smanga Kinelwe. I'll give you a chance now. Responsible for maintaining records and control of new and existing companies. Which one is this, Smanga?
3.1.5.
3.1.5, independent auditor. No, that's not the right one. Let's choose another one.
Oh, 3.1.1.
3.1.1, yes, that's correct. 3.1.1, it should be B. We're talking about CIPC here, which is responsible for maintaining records and control of new and existing companies. Basically, CIPC is like more, that is an institution that we use to register a company. If you want to register a business, you must go to CIPC. Then they will allow you to register a business. And then that is companies and intellectual property commission. That's where we do company registrations. If I can just show you something about CIPC, you will see this is for business registrations. There is it here. So if I want to register my company, I'll go to Companies and Intellectual Property Commission. That's where I'm going to register the business. You're going to do, there's a lot of things that you can do here. You're going to register your business, submitting the annual returns, creating bank accounts for your business. So all the companies that you can see whenever you go to town, they were registered through CIPC. So it's more of about company registrations. Okay, the business is responsible for its own debt and the liability of owners is limited to the amount they invested. This one is for you, Kinelwe.
What can you say about this? 3.1.4.
3.1.4, what is that? Limited liability. Yes, very good on that. Limited liability, it means that the business is responsible for its own debt and the liability of owners is limited to the amount they invested. Yes. So which means now if the business become insolvent, the creditors can only claim what is in the business only. They cannot go to the property. They cannot go and claim the property of the owners, no, but they can only take what is in the business, what has been invested in the business, okay? And number D, responsible for expressing an opinion on the financial statements of a company. Which one is this one, Smanga?
3.1.5.
3.1.5, that is an independent auditor, exactly, responsible for expressing an opinion on the financial statements of the company. Very good on that. And then the last one, an elected member of the board responsible for running the business and implementing policy. This one is going to be a director, obviously, the remaining one. Okay, let's go to 3.2 now. Let's do the real work now. Guys, please focus. If you don't focus on what I'm reading, you won't be with us in this question. Please, now we're going to deal with the real stuff. When I'm reading, you must read the information so that when I ask you a question, you are aware of what we're doing. Let's go together. I want us to go together. So this is like the question that I'm going to go through, and then we're going to go through the information. Then we start answering. Bargain Traders Ltd. This is the company that we're going to work with. They're saying here, Bargain Traders Ltd is a public company listed on the JSE. The business has an authorized share capital of 1 million ordinary shares. These are the shares that have been authorized, 1 million ordinary shares. So what is required, what we're required to do, 3.2.1, we are required to prepare the following notes to the balance sheets, right? They want us to do the notes to the financial statement specifically for a balance sheet. Number 1, ordinary share capital. That is note number 7. We know it is 7 marks for us to do that. Retained income, that is note number 8. They want us to do that. That is 10 marks. Trade and other receivables, that is 10 marks. You see the test that you're going to write in March, there will be these notes. They will be asking you at least ordinary share capital or retained income. They might not ask you trade and other receivables, but these two, they will ask you definitely. They will ask you this note. So it's very important for you to understand how to do ordinary share capital note, how to do the retained income note, how to do trade and other receivables. We've already worked on these notes before, but I want us to master them. I want us to understand them as we understand ourselves. Okay, that is 3.2.1. 3.2.2, let's see. Complete the balance sheet on 30 June 2014, where notes are not required. Show all workings in brackets to earn part marks, right? Statement of financial position or the balance sheet as at 30 June 2014. That's what we're going to work on. 28 marks. You can see like there's a lot of marks that you're going to like obtain there. 3.2.3, calculate the net asset value per share on 30 June 2014. Net asset value per share, this one is very important, is very easy. We're taking the net asset, which is the total equity divided by the number of shares. But I'm not interested on this one for now. We'll be looking at this one when we're doing the financial indicators. Comment on the price offered for the shares that were repurchased. Quote relevant financial indicators, actual figures, ratios, or percentages to support your comment. You just comment on the shares that were repurchased. I don't know what they want us to comment on, but they want you to have a comment on that. So this one, it requires a critical thinking from you guys. You must be able to interpret the information that is in front of you, give it a meaning, explain to someone who doesn't understand accounting, what can you say about this? Make me understand. Even if I've never done accounting before, but you have to make me understand. That is 3.2.3, 3.2.4. I'm not interested in those ones. And then 3.2.5. The CEO, Kylie Mason, has convinced the company to repurchase a further 90,000 shares during the next financial year, 30 August 2014. Kylie Mason currently owns 315,000 shares, which represent 45% of the issued shares. Calculate. Let me not read this question as well. We're not going to focus on, but what I want us to do here, 3.2.1, 3.2.2, 3.2.3. No, 3.1, 2.1, and 2.2. These are the questions that I want us to focus on more for today. Here is the information in front of us. We go through the information. When we finish, remember, as soon as I start with information number A, right? As soon as I start with the information number A, I need to, by the time I go to the last one, which is number E, I should be done with everything. So you read the information, you do what you need to do. You don't read the transaction and then you go and start answering no. As we're reading the transactions, we answer the questions, guys. Yeah, we do what we need to do. So here I have, okay, I didn't complete this thing here. It's fine though. We are here. Ordinary share capital. This is where we're going to do ordinary share capital. We're going to do the retained income, and then we're going to do the trade and other receivable note. Already I've done the formats there, and then we're going to do the balance sheet on 30 June 2014. This is our statement of financial position. So we're just going to fill in the information wherever it needs to go to until we at the end. Starting from here, this side, they told us here that Bargain Traders is a public company listed on the JSE. The business has an authorized share capital of 1 million ordinary shares, right? Already here, I need to know that I need to come and say authorized in note number 7. How many shares were authorized? That is going to be 1 million. Ordinary shares. These are the shares that were authorized. Then I can go to information number 8. Issued share capital comprised 850,000 ordinary shares on 1 July 2013. So which means now these are the shares that have been issued at the beginning of the year. These are the shares that have been issued at the beginning of the year. So they definitely going to be on my ordinary share capital note. How many shares? That is 850,000 shares issued at the beginning. So now I just need to know the price, because I don't know they were issued at how much, but I know very well that they were issued at the beginning. That's what I know. Okay. Then let's carry on. The following was extracted from the books on 30 June 2014. So this is our trial balance that we can see here. Fixed or tangible assets. Carrying value, they didn't give us the amount. We don't have to panic when you see something like this. We just carry on with the information. Fixed deposit, Swan Bank, 120,000 rands. So they're giving us here, they're giving us the fixed deposit that is sitting in the trial balance, but we don't know whether this is the final amount or we still have to adjust it. But I know very well, where does the fixed deposit go? It goes to my balance sheet. So I'm just going to open a bracket here and say 120,000 rands, right? And say 120,000 rands, which is my fixed deposit. Ordinary share capital, 850,000 shares were issued. Today is 5,737,500 rands. But I don't know whether this is the value at the end or it is the value at the beginning. I'm not sure about that. So because of that, I don't know whether I should put it as like the value here, which is like the value for shares that were issued at the beginning, or the value for shares that were issued at the end. For now, I'll skip this one, but I'll just take note of this amount that I need to be aware of. But I know very well that how many shares were issued? 850,000 shares that have been issued. I don't know whether at the year end I'm still having 850,000 or things have changed, but we're gonna carry on. Retained income, 1 July 2013. What is happening here? We have 181,900. This is the retained income at the beginning. 181,900. 181,900. This is the balance at the beginning for retained income. Okay. Then the bank, when it comes to the bank, we have 351,200 rands. This is the cash in the bank. That is for cash and cash equivalent. So I'll go to my balance sheet, 351,200 rands. That is going to be the amount that I'm going to record here, 351,200. I'm not going to write it here because I'm not sure whether I'm still going to adjust the amount or not. Loan, Drake Bank. So this is the loan, 295,000 rands. Where is it gonna go? It is gonna go straight to my loan non-current liabilities, which is 295,000 rands. Okay. Trading stock, 355,700 rand. Where should it go? It goes to the inventory, 355,700 rand. You can see how we're going with our information. I don't jump here and go and check if there's anything that they talk about inventory here. You're wasting time. We don't do that. You don't do that. Wait for, you will come here. Finish all the information that is on top. Don't go to your trial balance and say, okay, there is inventory, there is trading stock here. Let me go and check if there's anything about trading stock here, because you will keep on checking and checking and checking. There's nothing, and then you go. That is a waste of time. Carry on with the information step by step. Okay, net trade data after deducting provision for bad debt. 118,370. 118,370. They gave us the net trade data. We know very well that this net trade data should go to the trade and other receivables note, because there is a note here for trade and other receivables. So that's why I need to go and record that amount, which is now 118,370. And we know very well the format. The format for trade and other receivables says trade debtors less provision for bad debt. But they saying they gave us a net trade debtors after they said after deducting provision for bad debt, which is 118,370. Okay, so I'm going to record it here. But these two lines, I can even just remove these two because they're not supposed to be here. They gave me exactly the net trade data. But whether I still need to make an adjustment for the net trade data or not, that's why I'm not going to put it here. Because these are the amounts that are sitting in the trial balance. Anything can still happen on those amounts. You must not just assume that these are the final amounts. We can't do that. Creditors control, 197,000. Where is this one going? It is going to my trade and other payables on the balance sheet. So I'll go there and say 197,000 here. Okay. And then SARS income tax, provisional tax payments, that is 320,900 rands. That is 320,900 rands. What does this one mean? It means SARS is owing us. This is a receivable. It goes to trade and other receivables, 320,900 rands. So I'll go there and say on my trade and other receivable note, I'll go here and say SARS income tax. Right, SARS income tax, and then what am I going to record here? 320,900. Okay. Dividends on ordinary shares. These are interim dividends. They're telling us here. Where do we record interim dividends? 315,000 rands. I know very well that they need to go to the note for retained income. We do have interim dividends there, which is like that is interim or paid. 315,000 rands. We don't usually have a calculation for this one, so I'll just record it as my final amount. Okay. And number C, they're saying here, no entries have been made for the repurchase of shares. You can see now, we have a repurchase of shares, however, no entries have been made. So what does this one tell us about this amount of ordinary share capital that is sitting here? Most likely, this is the balance at the beginning as well. This 5,373,500. This could be an opening balance because we can see here that no entries have been made for the repurchase of shares. Okay, let's carry on with the transaction. On 1 October 2013, the business bought back 150,000 ordinary shares from a certain shareholders. Although the market price of the shares was R9.25, they accepted 7.40 Rand for each share. These shareholders were not entitled to interim dividends. Because this repurchase, this share buyback was not recorded, it means now This 5,737,500 does not consider the share buyback is not considered in that amount. What does that mean? It means this is the opening balance for the shares that have been issued at the beginning. So this 5,737,500, where should it go? It should go to my ordinary share capital note, 5,700,000. This will be the shares issued at the beginning, 5,737,500. Okay, that's what it tells me, because I know from that amount there was a repurchase of shares that was not affected, that was not considered in that amount. Now I need to record on 1 October 2013, the business bought back 150,000 ordinary shares. So there's shares repurchased here, which is 150,000 shares that were repurchased. But at how much? They told me here that from certain shareholders, although the market price for the shares was R9.25, that is the market price, they accepted R7.40. So which means now these shares, we were supposed to buy them at R9.25, but they opted to sell the shares to us at R7.40. So which means how much did we pay here? We paid R7.40. We paid R7.40. You must remember when we're doing a share buyback, there's that journal entry that I showed you to say what do we debit and what do we credit, and also considering the retained income that is affected there. Do you still remember this journal entry for share buyback? Where we have to debit ordinary share capital, we have to credit the bank, and then we have to debit the retained income. So this is exactly the journal entry that we need now this side. This is exactly the journal entry that we need to look at now. This is exactly the journal entry that we need to look at now and deal with it. Okay. Ordinary share capital, credit the bank. You can see there that how much did we pay here? We paid R7.40 for each share. That's what we paid. We paid R7.40. So that is going from the bank. From the bank, R7.40 is going to go out. That's what you can see here, credited. But ordinary share capital, what did we say about ordinary share capital? We said we are recording the average price, right? We said we are recording the average amount here. I'm not going to record R7.40 here. I need to know how much I issued those shares before. At how much? These 150,000 ordinary shares that I'm buying back. At how much was the issue price when I was issuing those shares? I need to go and look at that amount. I need to go and look at the issue price, because this side, this was what was paid, right? And then debit ordinary share capital, I need to check the issue price here. So how much was the issue price when I was issuing these shares? These 150,000 shares that I'm buying back today, at how much did I issue them? Because if you go to our note, you can see these shares will definitely be, they're definitely coming from this 850. Do you guys agree with me? The 150 that I'm buying back today comes from where? From this 850 that I've issued before. So now I need to find out how much what was the issue price for this 850? That is the average issue price that we need to calculate here. Average issue price. That's what we need to calculate right now. So how are we going to calculate that average issue price? Because we know we do have 5,737,500. I have to divide it by 850. So that I know at how much did I issue these shares per share. So if we divide the two amounts, how much we're getting? How much we're getting if we divide the two amounts? 5,737,500. 6.75 rand, yeah?
Yeah.
Okay. 6.75 rand. What is this? 6.75 rand is what? Is my issue price, right? So which means these shares were issued at 6.75 rand. Right, at 6.75 rand. What does this mean? It means we were supposed to buy them at 6.75 rand, but we bought them at 7.40 rand. You can see now what is happening here. Now we said the difference between the issue price and the amount that has been paid. That difference goes to retained income. If I'm buying back shares at a price higher than the issue price, the difference will go to the retained income. Then how much will be the difference? 7.40 rand minus the 6.75 rand. That is going to be the 65 cents. 0.65 cents. So which means this amount of money, where is it coming from? It's going to come from the retained income, because I paid more than what I issued for. Then the extra amount will come from the retained income. That's what we spoke about before, guys. That's what I hope we still remember this. So now, what am I going to record now here? I'm going to say 6.75 rand. I'll never record a price that is higher than the average price here. Here, I'll never record 7.40 rand. Even this 9.25 rand, this 9.25 rand is not relevant. We're not using it. They put this amount to confuse us. They said here, although the market price for the shares was 9.25 rand, they accepted 7.40 rand, which means these people, they were supposed to charge us 9.25 rand when we buying back these shares, but they allowed us to buy them back at 7.40 rand, which is good for us as a business. However, for them as well, they are still going to make a profit because they bought it at 6.75 rand and they're selling it to us at 7.40 rand. So they're making a profit of 65 cents, which is still okay. 150,000 times 6.75 rand, how much we getting? $150,000 times 6.75 rand, how much we getting? Come on, guys. Come on, guys. Come on, guys. How much we getting?
1,12,500.
1,012,500, right? 1,012,500 rands. That is the amount that we are getting. Shares issued during the year. We haven't had anything about that, so we can carry on with our information. Which means now we are done with this transaction. However, we must not forget about this. We must not forget about this 65 cents. This 65 cents, where is it supposed to go? It's supposed to go to the shares repurchased here. So I'm going to have 150 on the retained income, 150,000 times 65 cents. How much are we going to get? How much are we going to get as our shares repurchased on the retained income?
I got 90,000. Wait, I think it's the wrong amount. I got 97,500.
97,500 rand. So this is going to be negative 97,500 rand. So that is the amount that will go to. That is the amount that will go to the. That is the amount that will go to the. So it's something like so on your journal entries, it's gonna be something like here ordinary share capital we're going to have 1,012,500 if I'm recording the full amount. And then on the retained income, I'm going to have 97,500. And then on the credit side, it's gonna be both of these amounts. Okay. What's going on now? Gonna be both of these amounts that they're going to be on the credit side. So it's 1,110,000. So which means that is the price we bought shares with. Okay. But yeah, that is the journal entry, which is giving us the same thing in terms of the full value. There it was just per share amount, but now we're recording the full amount. Okay. Now we can carry on to number D. The following adjustments have not yet been taken into account, which means they have not been recorded at all. These transactions, they were not recorded at all. Okay. Insurance included an annual policy of 29,832 paid for on 1 December 2013. We didn't speak about our accounting period. When is it starting and when is it ending? We did not talk about our accounting period. We need to know when is our accounting period starting and when is it ending. Because if you look here, they're saying the following is sourced from the books on 30 June 2014. So which means now it is ending on 30 June 2014. That's where it is ending. So and then when is it starting? When is our accounting period going to start if it ends on June 2013? It is going to start on 1 July 2013. That's when it is going to start if it ends in June 2014. Okay, so this is our accounting period. Now, what is the transaction saying here? The transaction is saying insurance included an annual policy of 29,832 rands paid for on 1 December 2013. So which means now on 1 December 2013, we paid an amount of 29,832 for full year, for the full year, which means now starting from December, there will be, definitely there will be a month that will be outside the accounting period, because starting from December, January, February, March, April, May, June, July, I have, April, May, June, that is about 7 months. That is within the accounting period. There will be 5 months that is outside. That 5 months that is outside the accounting period, where am I going to record it? Is it an accounts payable or is it a receivable, this one? Where is it gonna go? Are we having a prepayment here or what? Or receivable or received in advance or whatsoever? Expense payable.
Is it what you might call it, accrued prepaid expense?
Definitely, it's going to be prepaid expense for 5 months, right? For 5 months, because
Yeah.
if I'm paying from December, 7 months will be within the accounting period, and then 5 months will be outside. So this 29,832 will go to my note for trade and other receivables. So I'm going to have what here? I'm going to have a prepaid expense. That's what I'm going to have in my note, right? So I need to say here, prepaid expense. So, and then what am I going to do for my workings? 29,832 divided by 12, right? 29,832 divided by 12. And then after dividing it by 12, I need to multiply it by how many months? By 5 months, which is outside the accounting period. 5 months is outside the accounting period. So how much am I going to have here as my prepaid expense? Because prepaid is only for 5 months. How much are we getting?
I got 12,430.
12,430, yes. That is going to be a prepayment for this insurance. That is going to be a prepayment for this insurance that should go to trade and other receivables note. The provision for bad debts must be increased by 6,100 rand. So which means now there is that provision for bad debts they told us about there to say it has been already been subtracted. Net trade debtors after deducting provision for bad debts. But now they're telling us here that it must be increased, which means what we deducted there was less. We need to go and deduct more, 6,100 more. So which means now on the net trade debtors here, I need to go and say minus 6,100 because what was subtracted before, it was less by 6,100. So I needed to deduct the extra 6,100 because I needed to increase it. Okay. Number 3, unused packing material amounted to 9,500 rands. What is this one? This is an inventory. It is going to be part of trading stock. Unused packing material amounted to 9,500 rands. So which means now I need to go to my inventory, and then I'm going to add how much there. I need to add the amount of 9,500 rands because that is going to be part of my trading stock. Okay, then now a debtor with a credit balance. A debtor with a credit balance of 11,700 is to be transferred to the creditor's ledger. You see now, a debtor with a credit balance of 11,700 is to be transferred to the creditor's ledger. Now this one becomes a vice versa. This is a transaction that we spoke about in the previous class, and then that other class as well. But now this one had a credit balance, which means this debtor was on the credit side. But now if I'm transferring it now, it's going to go back to the debit side now. So the journal entry that I'm going to have here, I'm going to debit trade and other receivables. Then what am I going to credit? I'm going to credit trade and other payables. Not sure if this one makes sense, guys. This debtor had a credit balance, which means now this debtor was on the credit side. Now I'm taking it to the debit because they're saying was transferred. A debtor with a credit balance, it means the debtor was on the credit side. We were owing that debtor of 11,700 is said to be transferred to the creditor's ledger. So which means now I'm transferring it to the creditor's ledger. Then what is going to happen now? I need to debit my trade and other receivable and then credit what? My trade and other payables, because this one was initially on the credit side. Now I'm taking it back to the debit side, and then I'm going to credit the contra account, which is going to be trade and other payables. For how much? 11,700 rand. It's going to be 11,700 rand. So if it's like that, when I'm debiting trade and other receivable, what does that mean? Am I increasing trade and other receivable, or is it decreasing? Which side is trade and other receivable decreasing on, and which side is it increasing on? What do I need to do with this amount on my trade and other receivables?
Are you going to add it?
Very good. I need to add it on my trade and other receivables. So which means now on my net trade debtors, I need to say plus how much? 11,700. What must happen with my trade and other payables? What do I do with trade and other payables? Add it or subtract it?
Do you also add it?
Exactly. Why am I adding it is because trade and other payables is a liability. If it's credited, it's a liability. And if it is credited, who is outside now? Okay. If it is credited, it means I need to add it. So my trade and other payables will be added. So I'm going to say plus 11,700 rands. Okay. Plus 11,700 rands. That is going to be my trade and other payables. Now, let's carry on. The bank reconciliation reflected a post-dated check for 33,000 rands, dated 31 August 2014. What is a post-dated check? I want to understand first, what is a post-dated check? What does it mean?
Is it like a late EFT or something like that? Or is it one of those things where bank reconciliation's done on like the 21st and then there's stuff that are outstanding? I'm not sure.
Hello, guys.
Is it
Can you
only
hear
my
me on your
network
side?
that's bad?
You can't hear me on your side, Smangana.
Yeah.
Yeah.
I stopped
There was a
sharing you
time
for a
where I
minute.
couldn't hear you for like 5 minutes.
5 minutes. How is your side, Kinelo? I think I'm only experiencing network now, just 1 minute before, like now. Were you hearing me, Kinelo, on your side?
Yeah, I was hearing you when you were reading the transaction, but then I stopped hearing you when I was trying to explain what I think post-dated check was.
Yes, but before that I was okay. I think, Smanga, your network had a problem because I'm only experiencing.
Yeah,
Yes?
it data with a credit balance of 11,700 angizwanga yonke.
You didn't hear
Ngigcine lapha
anything there.
ku-packing material. Yeah.
Yeah, I can see that the meeting kicked you out. You are outside. I just admitted
Yeah.
you now. No problem. I'm gonna explain it to you now. Before we even talk about the meeting document. Let me explain this one to you now. We're talking about a data here. They're saying this data with a credit balance of 11,700. Remember, a debtor is someone that is owing us, right? A debtor is someone that is owing us, had a credit balance. So which means now this data was this side, right? It was on a credit side, trade and other receivables. I'll just say that, right? Trade and other receivables was on a credit side, okay? A debtor with a credit balance. It means trade and other receivables was on a credit side of 11,700 is to be transferred to the creditor's ledger. It means now this one, if I'm transferring something that is on the credit side, I need to take it to debit. Because it had a credit balance, I need to take it to debit. And then what am I going to credit now? That's why I'm taking this trade and other receivable. I'm saying I'm removing it from credit side and then I'm putting it on a debit side. Then the contra account that I'm going to credit, it is going to be trade and other payables. Whenever I'm transferring a debtor from a debtor's ledger to a creditor's ledger or from a creditor's ledger to a debtor's ledger, these are the only two accounts that are going to be affected. And then what do I need to do now is that I need to deal with the first account that I can see here. Here I'm talking about a debtor which affects trade and other receivables. It has a credit balance. Then when I'm transferring it, which means I'm taking it to debit now, then the other account will be credited. That's why I can see here I have trade and other payables. Therefore, in this scenario, because trade and other receivables is an asset, trade and other receivables is an asset and it increases where? It increases on a debit side, and then trade and other receivables is a liability. And since this is a liability, it increases on a credit side. That's why I'm saying this 11,700 will be added to trade and other receivables. That's why you can see it is added there on the net trade debtors. I added 11,700, and then this other one will be added on the trade and other payables on my balance sheet. That's why you can see here trade and other payables there's 11,700. It's either I add it on both sides or I subtract it on both sides. But at the end of the day, it doesn't make any effects because I'm moving it from this side to the other side. So now you can see here, we added it under payables and then we added it we added it on the other payables and then we added it on the receivables. But if it was the other way around, I was going to subtract it. In this scenario, I need to add it. Does it make sense on your side, this one?
Yeah.
Okay, perfect. Now we can move on to the other one. We're talking about a post-dated check. A bank reconciliation reflected a post-dated check of 33,000 dated 31 August 2014. Kinelo, you were still explaining here. Please explain again. What were you saying about this one?
I was saying, is it like a check that was late, or is it something that wasn't shown on the bank statement and then you reconcile with it?
Okay, not is a check that didn't show on the bank statement. You are correct on that because it won't show on the bank statement. A post-dated check. You see, when we're doing reconciliation, your explanation is correct, but I want you to put it this way, right? A post-dated check is a check that is dated, that has a date, or maybe let me just say it like that: is a check that can only be withdrawn at a later stage, not now, right? It is not really late, but the time for it has not come. If I give you a post-dated check, which means if I say you can only withdraw this check, since we are in February now, you can only withdraw it in June. A check that is dated June, it is a post-dated check because you cannot withdraw it up until June arrives. That is a post-dated check. As we can see here, the bank reconciliation reflected a post-dated check of 33,000 dated 31 August 2014. So which means now, whichever person or the supplier or the creditor that we were paying this 33,000 can only go and withdraw it in August 2014. And what does this mean? August is outside our accounting period. It means now, remember, when I'm issuing a check, what do I do immediately when I'm issuing a check? Immediately, what do I do when I'm issuing a check? I'm recording it on the CPJ. Immediately, when I issue a check, immediately I'm going to say debit, accounts payable, right? I'm going to debit accounts payable because I'm paying a creditor here. I'm going to debit accounts payable, which is a liability. My liabilities are going down. And then what am I going to credit? I'm going to credit bank, which is an asset. Because why am I doing that? It's because I'm making a payment. When I issue a check, I am making a payment. We must not forget what I showed you guys previously here. This accounting equation is very important for us to understand. I want to put it here. Accounts payable is a liability and it decreases on a debit side. That's what we can see here. Liabilities, they decrease on a debit side. And how much was the amount there? 33,000. So, which means now I debited 33,000 and then I credited 33,000. When I was issuing that check, however, this check is post-dated, which means now it will never be withdrawn this year. It can only be withdrawn when? In August. And when is August? August is outside our accounting period. Remember, our accounting period is ending 30 June 2014. So August is somewhere here. August 2014. Because this person will not receive this money by 30 June, right? Does it mean we're still owing the creditor or not? Yes, I understand we gave a creditor here. We gave them a check during the accounting period, which is within the accounting period, but they only going to withdraw it after year end. What does that mean? Does it mean we're still owing them at this date or not? The answer is yes, we're still
Yeah.
owing them, right? Exactly. We're still owing them on 30 June. So which means now this journal entry that I record whenever I issue a check, the reason why we deal with post-dated check, remember those are the checks you will find on the CPJ, but you're not going to find them on the bank statement because the amount has not been withdrawn. So it won't reflect on the bank statement, but I've already recorded it on the CPJ. By recording it on the CPJ, I mean I have paid, the cash has moved out of my bank account, of which that's not the case. That's not the case. For me to credit the bank, I mean this amount of money has left my bank account, of which that's not the case. By 30 June, that amount did not leave my bank account, but I've recorded as if it has left my bank account. Even my payables, I'm recording as if I've already paid this amount. I'm no longer owing this creditor. However, by 30 June, I'm still owing the creditor because the creditor has not received this amount of money. So what does this mean? It means that on my cash and cash equivalents, I need to go back and add back the amount of money that I said I've paid. I've not yet paid this 33,000. So I need to add it back on my cash and cash equivalents. And then what do I need to do with my creditors? I need to go and add it back as well on my creditors to say, I'm still owing these people. They haven't received this money. They will only receive it in August. So which means next year, that's when I can deduct 33,000 and then I can deduct 33,000 here. Does this one make sense, guys?
Yeah.
Okay, thank you. Thank you on that. Let's be careful. Post-dated checks, we can only withdraw money once that time has arrived. So even if you're owing me now, if you can give me a check that is dated June, you're still owing me. It's like you have not yet paid me until June comes. That's when I can get my money. But if you can't tell me that I gave you a check now, I'm no longer owing you. But that check is dated June. What must I do with that? There's nothing I can do because I have to wait for June. It's like you have not yet paid me. You have once the money has left your bank account, that's when we can say you have paid me. If the money is still in your bank account, you have not yet paid me. This is like the post-dated check. Payment can only, we're going to record in our books as if it has been paid, but it has not been paid. So we have to reverse this journal entry. This is the journal entry that we needed to reverse. And when I'm reversing this journal entry, what am I going to do? I'm going to debit bank again. So by debiting bank, I mean 33,000 is coming in. And then credit what? And then credit trade in other payables. So I'm sorry for saying accounts payable. Trade in other payables. Trade in other payables is the same as accounts payable, guys. Trade in other payables is the same as accounts payable. Okay. So this is the journal entry that we have to do to reverse this. That's why you see me adding 33 here is because of this journal entry to reverse what I've recorded in my books. I can't say I've paid people when the money is still within my bank account. We have not yet paid that creditor. Okay, let's go to the next one. The statement received from Drake Bank in respect of the loan reflected interest capitalized of 31,200 rands. Monthly repayments include 10,800, 10,800 including interest. These payments will end in 2017. Remember what we have in our trial balance. Now we're talking about the loan here. Loan Drake Bank. We have 295,000. That is the amount that we have in our trial balance is 295,000 rands. That is the amount that we are owing. But here they're telling us about an interest, which means the interest has not yet been added there. The statement received from Drake Bank in respect of the loan reflected interest capitalized of 31,200 rand. So which means this 31,200 is the interest that is supposed to go to my loan. I need to go and add it there as what? As my interest. So I have 295,000 rands there. I need to say plus how much is my interest? 31,200 rands. That is the interest that I need to go and add. Where am I going to add that interest? I'm going to add it on my loan, 31,200 rands. Hope you guys can see there. There is an interest of 31,200. And then they're telling me about what? Monthly repayments are 10,800, including interest. Now, remember, on your loan, there must always be a minus current portion of loan all the time. And how do we calculate the current portion of loan? Remember, I always encourage you to do a T account in this scenario. But look, they didn't give you the opening balance. They didn't give you the closing balance here. So it's impossible for you to do a T account. But we know very well that the amount that is sitting on the trial balance is the amount before interest has been catered for. Interest has not been included in that amount. That's why they're giving us an interest here, as well as current portion of loan has not been subtracted here. So we need to subtract the current portion of loan now. How much would be the current portion of loan? Let's read the transaction again. I want to show you something. They saying here, the statement received from Drake Bank in respect of the loan reflected interest capitalized of 31,200. So we know that this is the interest, 31,200. Then they're giving us monthly repayments at 10,800, including interest. So it means now, from these monthly repayments, I need to remove interest so that I know how much would be my capital portion that I've paid. That will be the current portion of loan that will still be paid in the following year. So now 10,800 multiplied by 12, those will be the payments including interest, and then I subtract the interest, then I'll get what? My capital portion. Let's see. Payments including interest. How much is it going to be? It's going to be 10,800 multiplied by 12. And then how much am I getting? 10,800 multiplied by 12. How much are we getting here?
129,600.
129,600 rand. So that is going to be my payment including interest. Now let's remove the interest expense. Interest expense is how much they gave us here. They said it is 31,200. And then I'm going to remove it here. I'm going to say minus 31,200. And then how much am I going to get? I'm going to get the 98,400. What is this 98,400? This 98,400 is going to be the capital portion, right? This is going to be the capital portion. Then now, this is the 98,400 that I'm going to subtract here, and then I put it as part of what? My current portion of loan will be 98,400, and it will be subtracted there on the loan. Are you guys following on this one?
Yeah.
Okay, thank you. You must always know, for you to get the capital portion, they didn't tell us about the capital portion here, but you know your payments including interest minus the interest will give you the capital portion, and this capital portion will be a current portion of loan that needs to be recorded here. Now, the last transaction on 30 June 2014, a final dividend of 40 cents per share was declared. A final dividend of 40 cents per share was declared. So obviously that will go to my that will be my final 40 cents per share. It will go to my retained income note. But how many shares are issued at the end? Because I need to know how many shares are issued at the end. How many shares are issued at the end? So which means now, during the year, I don't have shares that are issued during the year. So which means now, at the end, how many shares are issued? So that I'm able to calculate my final dividends. 850 minus 150. How many shares I'm left with at the end of the year? That's going to be 700,000. That will be, what's happening now? Okay, that is going to be 700,000 shares issued at the end. That will be 700,000 shares issued at the end. And then how much will be the value for those shares? That is going to be 4,725,000, as we can see here. So since I have 700,000 shares that are issued at the end, I can be able now to calculate what? I can be able to calculate my final dividends, which is, they said it is going to be 40 cents. 700,000 multiplied by 40 cents per share was declared. That is my final dividends. So how much would be the rand value?
280,000.
280,000. Thank you. 280,000 rands. That is going to be my final dividends. And remember, final dividends of 280,000 will still go to the balance sheet, shoulders for dividends. There is it there. 280,000 will still be there. They will always be the same. Final dividends will be the same as what? Will be the same as the final dividends will be the same as shoulders for dividends. Then now, number E, net profits after tax, after taking into account the adjustment above, was calculated as 813,600. The income tax rate is 20% of the net profit before tax. Net profit after tax, 813,600. Where does it go? To our retained income. We have net profit after tax there, 813,600. Okay, that is going to be my net profit after tax. And then now, the income tax rate is 28% of the net profit before tax. Since I only have the net profit after tax, how am I going to calculate? Because remember, I need, what do I need now? This side. I need the income tax. We must remember that on our note, SARS income tax note, we need to know the expense, the income tax expense for the year. How much is it? If we have the net profit after tax of 813,600, 813,600 times, I have the 28% there. Oh, the income tax, they're saying it is 28%. How am I going to calculate this tax? I will say 28 over how many percent?
72.
28 over 72, very good, because why are we saying that? Is because we're going to calculate it based on the 72%, 813,600. That is net profit after tax, which is 72%. 28% is tax, 100% is profit before tax. So which means now I'm going to say times 28 over 72. Then how much am I going to get as my tax?
316,400.
316,400, 316,400 like this. So which means now I need to compare now my tax. Initially, SARS was owing me 320. Now I've incurred 316. So which means who is owing the other? Now SARS is still owing us, but the lesser amount now. I need to say minus 316 here. 316,400. So how much is SARS owing me now is the total? 329,900 minus 316,400. How much is left? How much you getting?
4,000.
4,000 rands.
Yeah.
No, it can't be. I'm getting 44,500 rands here. 320,900 minus 316,400. I'm getting 4,500 rands.
Yeah,
check
it's
again.
4,500.
Okay.
Not
So now
40,000.
we guys, okay, no problem. So now we guys, we have dealt with all the transactions. By the last transaction, which means we're done with our question, the only thing is to deal with our spreadsheet, close up all the amounts. Ordinary share capital is done and closed, which I'm happy with this one. We're happy with ordinary share capital. Retained income, balance 1 July, we have net profit after tax, shares repaid, dividends on ordinary shares. I'm going to add these two amounts. And then we're getting 595,000. We're getting 595,000 here. And then now what is going to happen with the we need to get the total now, of which the total is going to be the balance of all of this. Okay. We're going to have all of this, and then how much am I going to get? 303,000 is my total. So which means now my retained income is sorted as well. Done. 303,000. That's what we have there. And then trade and other receivables, net trade debtors. How much are we going to get here? Let's add these ones. 118,370 minus 6,100 plus 11,700. How much we're getting?
$123,970.
123,970. That is my, and then SARS income tax is done, and then so which means now we are done with this one. We can close off and get the total, which is how much is our total here? Is 140,900. Our total is 140,900. This is going to be my trade and other receivables. Okay. So my trade and other receivables, I can put the total here, 140,900, which comes from the note. And then my retained income is 303,000. My retained income 303. And then my share capital, which is 4,725,000. 4,725,000. And then here I get the total of these two. And that is my shareholders' equity. And then what else do I need to do now? Fixed deposits, nothing else. Well, about fixed deposits, I can take it and put it here, 120,000 rands. Fixed assets, we didn't hear anything about fixed asset. Most probably it's going to be our balancing figure. Inventory, 355,700 plus 9,500. How much we're getting? How much we're getting here?
365,200.
365,200 rands. That is going to be our inventories. Then trade and other receivables were sorted. Cash and cash equivalents. How much we're getting here?
$384,200.
384,200 rands. Okay. And that is my cash and cash equivalent. And then which means now I can get my total, right, for all these three. Which is going to be 890,300. That is my total current assets. But the non-current assets, I cannot get the total because I don't have the fixed assets. Okay. Then now Non-current liabilities. How much am I going to get for this one? For the loan?
Two hundred and
227,800. Am I right like this? Huh? Trading other payables, how much we getting there?
$241,700.
241,700. Okay, thank you. And then which means now I can get the total of these three amounts, which is 620,100. We do have the non-current liabilities, which means in terms of my total equity and liabilities, I can get the total, which is 5,875,900, which means my total asset will also be 5,875,900, which means now I can get my non-current asset. Am I right? My non-current asset will be this minus the 890,300, which is 4,985,600, and then I can also get my fixed asset as what as a balancing figure, which is how much? 4,865,600. Okay. Okay. Okay, guys, so this is what I wanted us to do. It's more of about balance sheet. How are you guys feeling now about the balance sheet? I think we need to move on now. How are you guys feeling? Kinelo, how are you feeling about the balance sheet now?
Yeah, I feel better. I think it's just like also practice.
Yeah, definitely. Without practicing it, it's going to be a problem if you
Yeah.
don't practice.